Every weekend, Batswana cross the border into South Africa. The main attraction being the value of the rand to the Pula. Where favorable, they quickly buy the rand currency. Many of these Batswana are not even aware that they are actively participating in a form of foreign exchange trading. That, in essence, is what we will be discussing on this particular segment. Foreign exchange trading, otherwise known as Forex Trading or FX. It is not always sophisticated or intimidating as some people may think. It is rather something that is done by different people and various companies on a daily basis on various platforms with the aim of, amongst other things, earning a profit. Before it gets any more confusing than it already is, let us rope into the conversation a foreign exchange professional from one of the local commercial banks, Bakang Mabisi, to interrogate the subject further.
Just to give a broader perspective, foreign exchange trading is really the trading or buying and selling of foreign exchange currencies in the broader market. The Forex trading market is really a large marketplace. It's what we call the over-the-counter marketplace, where, the buying and selling of foreign exchange usually happens, and it's usually in currency pairs. So it's in two currency pairs, the base and the counter currency. So what happens is that market players buy and sell foreign exchange on the back foot of technical analysis as well as economic fundamental analysis in the hope of making profit or maximizing profit and minimizing losses. And on a daily basis, about a trillion or more than a trillion, actually 6 trillion of currencies are traded each and every day. That's actually the volumes that were recorded in April 2019. So we have, several different types of foreign exchange markets. We have the FX spot market, which is what people commonly use. We have the FX forward market. We have the FX options market. We have the FX swaps market. And then we have the FX futures market.
In the Forex language, there's what is called a base currency and a code currency. I believe you just called it a counter currency. What does that mean?
The base currency and the counter currency are, currency pairs that are traded in foreign exchange. So foreign exchange, is traded in currency pairs. So the base currency is what you get, for example, the Pula rand, or it's written as the Pula ZAR. So the BWP is the base currency, which is what comes first. And the second currency, which is the ZAR, is the counter currency. So the base currency, for example, if we have 1.3 as the BWP ZAR, that means with one of Pula, you can get, with one Pula, you can get 1.3 rands. That's initially what it means, just to put it in simple layman terms.
Let us bring in another platform where there's some sort of trading going on, the stock market. But we understand that Forex trading and stock markets trading are not the same. So at this point, I'd like for you to share some of the differentiating factors between the two.
I think the probably 3 things that make the stock market different from the foreign exchange market. First and foremost, the easiest thing is that you trade foreign exchange in the foreign exchange market, and then you trade the stocks in the stock exchange or the stock market. So with regards to the foreign exchange market and the stock market, the foreign exchange market is more liquid. You can get in and out much quicker than you can in the stock market. And then I think really the last thing is that when you look at the foreign exchange market and the stock market, there are different factors that really affect the stock market and the foreign exchange market. With the foreign exchange market, a lot has to do with the country, of the countries of the currency pairs. How is the economy doing? Are there geopolitical tensions? Is inflation going all right? What is the interest rate policy, future looking like, and the current as well? So a lot of what the country has to offer influences the foreign exchange markets in terms of currency pairs. And then when you look at the stock market, it's really influenced by, the company you buy into, how well it's doing. Yes, it's subject to geopolitical, tensions in the economy as well, but not as much as you have in the foreign exchange market.
There are some similarities, though, between the two, like how prices on the stock market fluctuate the same way that, in the Forex trading market, prices also fluctuate. So I want you to bring attention to why this happens. What forces or circumstances influence this fluctuation within the Forex trading market?
I think we have, quite a number of circumstances that influence this. So you have, economic data. How well is the economy doing of that country? Are there geopolitical tensions? Is the economic landscape, the political landscape, is it steady? You also have interest rates. How is the interest rate regime looking? Are you looking at an interest rate hiking cycle or an interest rate cutting cycle? And what do the investors think about that for the country? And I think thirdly, obviously, you're looking at factors such as inflation as well. How is inflation playing into the broader picture? And what do investors think about it as well? Like I said, the health and the well-being of the economy. Is the economy being run well? How is the jobs data? All of those factors really feed into how well the country is doing and how well the currency might perform or how not well it will be performing.
So let's come to the long and short of it. Who can trade on the Forex market and what do they need to do so?
It's a tricky one, but to be quite honest, we have different types of markets. You have the larger wholesale market where you have bigger institutions, banks, non-banking financial institutions, bigger corporations. And then you have the retail side of it, where you have, smaller players like you and I, where, you can buy your rand if you're going shopping over the border. You can decide, to buy stock because you have a small business and so forth. So it's the retail market and the larger wholesale market. So pretty much anyone. So in the retail market, it's really split up into, you can trade in banks. There are brokers who can trade on your behalf as an individual, or you can trade on platforms that are provided. But it's very important to also note that you have to see if those sites are actually, or platforms are credible sources or are credible platforms to use. We don't want you to be in a rut.
Join us again next time as we learn about the common Forex trading scams and how you can protect yourself. This program was brought to you in association with First National Bank of Botswana.
FNB, how can we help you?